Hello guys, this is Soji and you are welcome to Soji Forex. To all our new subscribers, I want to say thank you for subscribing to the channel. Thank you for the show of love, and I would love you to go to our previous videos so you can maximize every video on this channel. In today's video, I want to do a brief review, and the review is on market chart pattern. So our review is focusing on the chart pattern which we have been discussing now, and this is going to be a brief one as far as the review is concerned. So let's begin with the bullish flag pattern. So it is important for you to know that anywhere you find a trend, you can find a chart pattern. At any point of the market you find a trend, you will find a chart pattern. And at any point of the market you find the market ranging, you will also find a chart pattern. Okay, and I believe that makes sense and it is clear enough to you. So, and it is easier to get a continuation pattern and get it more profitable than trying to cash up reversal. Now, what am I trying to say in essence? What I'm trying to say in essence is, instead of looking for a reversal pattern, it is more profitable to look for a continuation pattern. Okay, it can be your M and W for in a continuation with the trend. And over time, based on my backtest, remember this is a review, the M and W pattern fails more than the bullish and the bearish flag pattern. Most of the time, 80 to 90% of the flag patterns plays out compared to that of the M and W pattern. And let's take a journey together. This is crash 1000. Let's look at this together. Okay, all right, let's begin from this point. From this point you can see price coming down. This is H1 time frame. Okay, and price returning, normally when price is returning from our upper Bollinger Band, we already know that from here we are looking forward for a reversal. So this price dropping from the upper band has confirmed to us that it's a reversal, but we cannot conclude until we have a break of trend, which is a break of structure, either by the price closing below our middle Bollinger Band line or by price action break of trend. And if we are to connect this, you will notice that here is our trend line, which is connecting this point together. Now, having our trend line connected to this point, remember, we will wait for price to break our trend line and this structural point, which we are having here, for us to establish that we are now in a downtrend. But here now, we have a double confirmation. Look at what happened. Here, we are having a chart pattern. So this is our bearish flag pattern. You can see this. So the price break it, retest it, and we are on our way to the downside. And you can see how this pattern plays out very fast and accurate. That's why I said it is one of the easiest way for us to trade. And afterwards, Look at this one again. Now you can see what happened. Another chart pattern formation. The same chart pattern, and we are on our way to the downside. So with this review is necessary. And you can see that is why I said it is more accurate, because for you to have an entry, you will need the price to break out of the flag, which is this channel that you have connect. And look at this point. Now what is happening here would have been a chart pattern. But eventually, look at what happened. The price did not break out of it. Talk more of to give us here a test and go down. And you can see now, instead of price breaking to the downside, price broke to the upside, and that is a change of direction. So these patterns are simple. And now that we have changed direction, look at here now, pattern formation for a buy, even on a higher time frame. And look at this. When we came in for this sell again, we have this flag pattern, which gave us this move. And if we are to wait on this one, you can see price did not break out of it, rather it continued up. So it would have saved you from having a wrong entry, which probably might have ended up as a loss. And when we come up here, look at it. We have this, and you can see what I'm saying. Price break out of it. So immediately the candle close outside of it, you make your entry, you put your stop loss, and you can see how that particular one plays out beautifully. And look at this point again. Here we have this and this. So it is easy for you to identify after a drop, an impulsive move, you see a market consolidating. At times it will be doing as if it's making a series of higher high, higher low for a bearish flag pattern, because this is a bearish flag pattern and it's a continuation pattern for a sell. Now you can see that it plays out well. And you can see now here, after this bullish move, we have this pattern. And it will see how it break out of it. So you can see that so far, this pattern that we have identified has been playing out. Look at this. And look at how it plays out. There is no one we have identified. Even these ones that are marked in this zone are on a lower time frame. And it plays out. I traded those ones on 15 minutes. Right? And even now for a sell, look at this. I already marked this out. And I'm waiting to make a sell. Can you see this? And now for price to break out of it. So this pattern are very, very effective. And they works. They are working perfectly well. Okay, I don't intend the video to be too long, but let's take a look at it from here. Look at this. Bearish flag. And you can see how price break out of it. So you can focus on this and build your trade. You can focus on this alone. You can see how effective it is. See how the price played out. Price break out of it. And you see that move. Here again we have another one. So these things are pretty much simple. Look at this. Can you see this? You just notice that you will have a strong move, and then before you know, it will begin to happen as if normally it's a retracement. It's in this retracement that you mark out your channel. It's a powerful strategy, and you can see that most of those retracements start from our lower Bollinger Band and it push inside, and from there we have our continuation to the downside. So you can see how effective this strategy is. Look at this one too, even this one that plays out here, and then how it plays out. So these things are very much pretty simple. All you need to do is for you to go back to your chart and backtest them. Go back to your chart and backtest it. Now this is crash 500, right? Look at it. You see how it plays out. We have this one too, and it is playing out. You can find it M15, M30, even on H4. Even this. All these things you see marked out are entries that I have made. Can see this? So you can go on and on to count this pattern and how effective. Can see this? This is another one. So you see now market came down at a point, then it began to do something like higher high, higher low, and then before you know, and you can see how beautiful it plays out. Okay, so these entries, at times this can be formed in an area of support and resistance, because at times this pattern will start to form until it enters into an area of support or area of resistance, or it can be a demand zone. It can even be a fair value gap until it enters the zone, and then it gets triggered and begin to move to the downside. So the advantage of this is that it helps you to trade more in the direction of the trend rather than looking for reversal. And for a double top and double bottom, look at what happened here. This is a first bottom, this is a second bottom. Okay, so this is the first move. Now for you to catch this move, remember we established at time this leg will be longer than the other one. So what you need to do in this scenario, after the first rejection of this first leg, you just mark that zone out. You mark it this way. Then you are waiting for price to return inside and let the zone be able to hold the price. That is one. And even if price, if it's going to do the inverse pattern that will take this low, let it take this low, but you are not making entry. You want to see an engulfing candle that will come back to engulf this bearish previous candle. then it now confirms to you that what has happened, this leg take liquidity of the first leg. And if this liquidity is taken, it is a more confirmed way the price will push up a bit. And that is exactly what has happened. And if you are to trade an M for this reversal, you can see that the price went up, came down. So what you would have done is to mark this particular order block or mark it as an area of resistance because price was rejected. So you are now expecting price to come back there and then reject. Look for a candlestick pattern. And as you can see we have several rejections and price moved to the downside. And if you are to have this as well, like a trend line now, connecting this low and this low, and if you add the bonus of it, which become a flag pattern, you are of a sure convinced that this is where you are going to, as far as this price movement is concerned. So this thing works, they play out perfectly. Okay, you can see here now, this is a W pattern. It is first leg, it came, and now, but it did not go far. It only tapped into this other block and continue to the downside. So at times, so you don't get relaxed. That is why I say when it comes to reversal, at times it is more dangerous. Okay, and just like this is still a W pattern. You can see that this is a divergence and this is an inverse. This one took liquidity of this side, and when you get this engulfing candle, it becomes a confirmation for you to go long. You can see how beautiful it plays out. So go back test, train your eyes on how to identify this pattern on your chart, mark them out and see how they play out. Ask question if you have in the comment section and I'll be there to answer you. I believe you are gaining value from this video. Please do not forget to like, share, subscribe, and above all, turn on your notification bell so you'll be the first to get notified when we publish our next video.